All right, good morning, afternoon, evening, wherever you're connected from. Many of you have asked me, some of you, your trading style or the kind of work you do, all right, or certainly the type of person you are to trade, the currencies, cryptocurrency, forex, just trading generally. The best I recommend for you is intraday and swing trading. Now, swing trading take longer time anyway. So swing traders actually look at the market from monthly and then now structure it down to weekly and probably take trade in daily or lowest time frame is 4 hours for their entry. Now, for you have been intraday, you probably want to look at weekly and then streamline at daily and then enter market at 4 hours or 1 hour. So let's look at the two in together. So what you're going to use is Felix Parss strategy. It's true liquidity concept. So very simple. Now, the first thing you want to do is that you can see this my line. Now, I didn't purport just using this line like this. You go to weekly time frame. Once you come into your market, maybe you have selected like 3, 4, 5 instruments you want to be trading. So you go to your weekly time frame and turn your chart into a line chart. Can you see what my own is? Turn it to a line chart. So when you turn it to a line chart, you want to draw lines. So I'm not going to go detailed of this because I've done this before. So you want to go, those of you if you're my student, you know how we actually draw this horizontal key level from weekly time frame. And it's very, very simple. So you won't find trade all the time. So you won't find regular trade. Now you have to be ready again to endure some drawdown for a while, especially when the market is going to be turning around. So you are interested in weekly overview of the market, and that's why some of you, if you are doing that, I will recommend Bekenet software for you because it's going to be very perfect for you. Now, when it give you overview, market overview for the week, you can see where to enter the trade from. Okay, so now, Parss strategy. Parss strategy is just simple price actions, resistance and support strategy that's developed by Plan B Xpress, Felix. So Felix believes that market actually, everything, no matter what style you want to deploy in the market, is still sitting on top of price action. And if you want to look at price action, there are so many things. If you're an intraday or day trader, sometimes you want to look at demand and supply zones much, much more. That is demand and supply zone trading strategy. And that's perfectly made seen on daily time frame. So now, so I don't want to draw lines necessarily on my chart, but I just want to have major key levels and all of that. And why is this major key level? This is a turning point, turning point, turning point. That's very powerful. Turning point, turning point. This is 2022 turning point, right? Coming down here and all of that. So of course, we have a turning point here, but just like months, which is going to be like you can do daily reference here. So it is when you are there, you want to use a kind of line, just not a total kind of move and all of that. Now you have a turning. So look at it. This was 2023, 2024, all right, 2024, or 2025. Look at it, 2025, January. That's massive, right? This 2024, September, January 2025. And then the market had been on the massive sell, right? So back down, crazily down. So we have this 2020, April. We try to make it up. Now resistance. Okay. So then another rejection. If you're going to make a Fibonacci retracement from here to here, you probably will find that happen. This is a pattern like a inverse head and shoulder. Oh, sorry, head and shoulder. Now, so turning point, rejection, and then we have this. Now, I have several attempts again now. My rolling here. We have the double bottom and all of that. We crash down again, sweep of liquidity, and then continue to go. So you can really say that, okay, this market probably is supposed to respect, because if you're going to go, that means you're going to go down to 2011 low. Wow. So this is a total low. Now, sometimes you want to get understanding of some fundamental about some of those currencies. If not, look at the turning point in 2023 and all of that. So broke it down and all of that. So let's just go. So now that's to show you that you as a swing trader, you have just very little to do. You don't need to over disturb your brain in trading. You just need to be more, you are not going to be frequent in the market. Okay. Now, so I've done the weekly just to mark it, the key points or turning point. And then this is USD chef. So now we go back to, so you turn it back to your candlestick. You can see the candlestick. So imagine if you find a trade here, it's going to take a long time. So what I would recommend for you, if you as you register on Capital Extend, select an account that says swap free. Right? Select an account that says swap free. Now look at, imagine this is weekly, so I need to go back to daily. So imagine how many week you waited here. So now, so you're not going to tell yourself, that's why I say it's an investment vehicle. So what will it be for you if you have find a very massive market? Okay, so let's say here, okay, and then go out with this, excuse me, that's about 753 pips, depending. Okay, so depending on your account size, that's what determine what you're going to be doing. So now let's go to daily time frame. So you have marked your weekly. You have business now much, especially if you're a day trader, intraday trader rather. So you are going to be working more with daily time frame. Okay, you are going to be working more with daily time frame. So there's something happen here on this. Can see this market has been so choppy. This is a people will see a very massive move here, but you will not see a massive move here. So if you come back here, you see that you have gotten so many opportunities to have entered. So what you're going to be using now is a pattern or enter the market, like when the market actually present to you. So you're going to be using what we call power of three or CRT for a turning point, because you are a swing or intraday trader. So when it comes to your point of interest or like a key level, you want to find a possible entry, right? And that's exactly what we're trying to do. For instance, look at it now. This power of three, look at this candle. This is the last candle, and then it swept, right? The difference between power of three and CRT is that the second candle must close inside the first candle. But power of three does not necessarily mean the middle candle to be what? To be lower than the three candles. So most persons who are going to be finding this may do this, may actually enter at the end of the third day. So meaning that they're entering here. You're a day trader or swing trader and all of that. So now if you're going to take an entry, for instance, say you are entering at the close of this candle here, that means your stop loss has to be below this low this week. And then you are targeting 1:2 risk reward or so, or depending on what you are now checking as an intraday trader. Now I'm going to show you a lot of things and strategy you're going to be using anyway. Okay, but just to show you one of the aspects if you are entering on the daily time frame. However, because sometimes when you are intraday or swing trader, the more lower time frame you go, the more confused you become. That's another thing you can have. Okay, you have similar thing. This is the power of three. This is a first candle, and it even formed like CRT. So this is power of three, the first candle, very massive. Now in the CRT candle too, it's the length of the candle really matters, make a lot of sense. So this is the candle range, all right? So this is the candle that take out. So the second day. Now most traders, what they do is that once the other candle closes inside the range candle, they enter, and their stop loss is below the wick, right? You can see the wick of that second candle, all right, that manipulates the range out. So then 1:2 risk reward. Sometimes people target it here, but you're not going to do much. So 1:2 risk reward, that will be somewhere here. So that means what you calculate to miss is about 65 pips. It's not much. Currencies is not difficult to trade, to be very candid. But you will need to have patience. That's one of the things. All right, so look at it now. This is just about 65 pips. So let's say you even use 0.1. That's $65 if you're going to lose any money. I don't think anybody need to have so much stress over currencies. It just allow you to run, to be very candid. All right, so now coming back to this point. Now, but other people, what they're going to do in this candle range is that they now refine back to like 4 hours and all the like, right? Okay, 4 hours, 4 hours, 1 hour, all right, so that they can find a appropriate entry or a sniper entry and all of that. Okay, now, so if that's the case, so this is what we're going to do. Then look at another one. This is power three, all right, and even like candle range. This is the range, and this is this. So this one is too long. So most time, what we do when we get all this thing is to use Fibonacci retracement. So I'm going to do that, and so that you understand how it goes. Now, all this, you don't get discouraged. So long the market has not hit your stop loss, just allow the market to be. That's why you need to open a swap-free account and let it run, as it were. So if you look at it, so for somebody who just find an entry immediately, so his stop loss is going to be very long because of the wick of this candle. So getting into this point, so it's going to make a stop loss below here. That's about how many pips? 70 pips, 72 pips. And like Bekenet always recommend 80 pips and all of that. So that means that fellow at this point is already in profit. So, but it take a longer day. It take a longer period, right? Because it's going to take how many period of time? Because this is daily. So you're going to look at 1, 2, 3, 4, 5, 6, 7. So many, maybe in less than 1 month anyway, the market's already achieved what you want to achieve. So, but there's so much money to be made in between anyway, but you don't want to involve so much stress to follow that, as it were. All right. So now, if you're going to look at the market, you now say, okay, yes, you step down to 1 hour time frame or 4 hour time frame. Now, if you look at this market now, so let's quickly look at this market. You can see, right, this market has been moving and trying to now return back up. So what you can have is that you have a level of resistance at this point, okay? Or just let's take this one here or here. So you just want to have some reasonable point, what we call a pivot point, that the market actually have been taking a return. And then probably you want to take this one. So how many? So that means if you are taking this one now, let's look at it. This one, yes, yeah. You can really say that the market is at the resistance level, but how many touch points do you have that is so significant? So then we have to take this now. Let's look at this. Is this one so significant? Yeah, I think it is. We have a turning point, we have a turning point, as it were. And let's now look at it. Do we have this one so significant? Maybe not much, right? Then do we have this one so significant? So that means we have to work with this one as more significant point, okay? So now return back to your candle pattern. So you can see the market actually got to a very significant point, what you can say a pivot point on daily time frame. So now you want to go to 4 hours. Perhaps what am I going to have? Is the market about to crash again? And if it's about to crash again, so let's go to 4 hours probably to see if I'm going to finding an entry into this market or not. So this is 4 hours. So at this point, you're going to be looking and using like a Fibonacci retracement level and using the smart money concept if it's going to work that way. Now, so look at it now. This market has done some kind of massive stuff. Let's look at it externally. Now, this is the lowest of this market you can have, right? So if this is the lowest of this market following this current trend, so let's quickly go and check what we need to check and see how we move. Let's look at this market. So you can see this market here. This is a high, all right? So if this is a high, this is a high internally, but this one have actually invalidated the whole thing. Then this is a what? Then this is a high. Okay, so this is a high. So that means we expect the market to actually correct back. So where is it going to correct back to? So let's quickly look at it. Since we have this, this is a high, this is a low, this is a high, and this is a low. So now what are we going to do? So probably you can use your Fibonacci tool. If I use my Fibonacci tool, what do I want to achieve? So I want to take the Fibonacci retracement from this low here to this high here and get a potential point where this market, because it's about to return back up, right? So it's a going up that the market is going to do, right? So what do I want to do? So I want to find a place of interest or point of interest or area of interest for this market. So that means this market probably looking at, now the structure actually got broken here. That's another thing you need to know externally. So the market, the structure got broken here externally. So if that's the case, all from here, so quickly understand, all from here, these are all from here. Let's take it down. These are other blocks. So you want to work on some of those things that market probably should return back to, right? This is another block here. You have this. So that means potentially you have this market probably to return back here for a buy. Then you have another other block here. So now you're going to evaluate the whole thing. Then we have another other block here. Fantastically, then we have another other block here. Now you may want to take this one to be more serious. However, but it depends on what the market is doing. So all of these points are just like, market where it comes to rebalanced market, perhaps a break of structure. So here you have this. Now this one is very fantastic because it's at 50% Fibonacci retracement level. Are there chances that it will come back there? Maybe no, maybe yes, right? You have to understand so many things involved. And then but not all market can give you a very, very nice structure as well. So you have this, you have this. So if you look at this back here now, you're looking at, okay, if the market will come back here. So that means you have all these areas of interest for the market to pull back. So when you pull back to those points, you want to find a significant reference point. Probably, maybe you want to go to 1 hour time frame. So going to 1 hour time frame, probably you want to see like power of 3 candlestick, because these are my confirmations for my conferences. All right, the power of 3 at that point, and then CRT or change of market structure, which you can go to like 15 minutes to get that right, and then you are able to work as much as possible. Now, if you're going to work on 1 hour equally, so let's take up this. They are what it is, right? So you can now say this is an uptrend, obviously, because when you have entered, so now this is external, it's an internal to like daily, even 4 hours, for instance. So let's look at this now, this market. What happened here? What simply happened here is this: the market it broke a structure here. This is a high. Then it created a kind of internal something or whatever. So, but this is a proper change of structure. And then the market will pull back, and then to magnet this. All right. So magneting that. Okay, so let's quickly look at this one. Okay. So that means this is a change of character, and then you want a pullback. So this pullback was actually a massive entry for you. You see, one of the most lovely things is that when market happen around your key level, it makes a lot of sense because you can have so much confidence to do what you want to do, right? So of course, this is a kind of continuations probably you're looking at as this market continue. Now here, this is a break of structure and at the change of character, and then you want to pull back to an extent, so it bounces on top of your this stuff. And so you have this one as a break of structure properly. Now this is a break of structure, massive one. What am I going to do? Nothing. You're waiting for the market to actually pull back relevantly. But you are targeting here as another block, probably even close to that your region. So this is another block. But there's something fantastic apart from your other block. There's a massive kind of fair value gap and imbalance in the market. So that's why I say you need to understand basic liquidity concept. Now, but if you learn, let's take our Fibonacci retracement to actually check it as a swing or intraday trader. So I'm taking my Fibonacci retracement to this point. And what happened? Boom. You have this market return back to your 60-50% Fibonacci retracement on your 1 hour. So you probably don't even need to go too much down because you are a swing trader. You don't have business to over refining your own, and this is just currency. So you don't have too much time for over refining, right? And then that is a kind of fantastic. Now, what I saw here is a fantastic overlap here. So that means your target, this is what I target. I have some traders, they are highly professional. It's only a plus setup they are looking for. It's only on 4 hour, 1 hour daily. So they remove 38. Anything that did not come to 50 and 61, they don't take it. So what do? They DCA their market. So what happened? So they put the market at 50 and the market at 61. Now, one of the things is that, this is a Fibonacci retracement, this is a massive fair value gap. Look at it from here to this point. So if I'm to use now how to enter, since this one is too broad, a broad fair value gap cannot just be tapped into. So most traders will tell you that just make use of Gumbox and then check the 50% to get the discount. So by the time you check the 50%, it's actually at the 50% Fibonacci retracement. What a massive confluence that you can be happy to make use of. So that means definitely you will have found an entry here. So now let's say you found an entry here. You are not the type that have too much time like Felix to check and DCA. Then you will now say, okay, found an entry here. Where will be your stop loss? Your stop loss will be below. Now, first of all, your stop loss by rule of this trading concept, your stop loss will be below this candle that caused even this fair value gap. So if it's that case, that means your stop loss is going to be here. So number two, some people, and your stop loss is just 26 pips. Now listen, some people now, so now another person, so if you are a type that this year, when the market came down again here, you are taking another entry. If you are not careful, this is a news. So you are taking another entry here at this 60, 61, right? So, but let's wait for here and analyze this all over. Now, most traders who are very conservative, so this is a break of structure. Now, this is another block, though was not respected. They put their stop loss below the other block. So let's say you take your stop loss below the other block, that's 36 pips. It's not much. So if you're using 0.2, that is $70 something, depending on how much you are trading with. Okay, if you're trading, so if you're now risking just $36, okay, that means you're targeting $72. It doesn't matter what happened. And I tell that people, I say it's better you do this than giving your money to all those third-party platforms and all that. Learn the basics and then learn to swing. Are you not going to make loss? Why not? You're going to make loss. Now, so let's quickly go 1:2 risk reward from that point. So let's target and see how much. Now, me on my Fibonacci retracement rule, when I get into the market, so my stop loss definitely is usually below, 70, this thing, if I didn't follow this, what do we call it? Fair value gap rule. That means just something below 78. So 1:2 risk reward will have been okay here. Now, listen, when I enter at 50, my next take profit that would be 1:2 risk reward will be at -23, minus 0.23 level, whatever. And then the next target profit I make is here. So assuming you this year. So that means it's going to be almost 1:3. So that's what you need to do as a swing trader. So you don't disturb yourself unnecessarily. All right, over trading. So now if you look at it, the market is doing what it's doing. The next thing you probably want to do is that when the market is on only, that the market actually pick up and break structure. It's a new break of structure and the trend continue. So that means a new break of structure happen here. This is a new break of structure happen here. Okay, so a new break of structure happen in that place. I'm just giving you detail, very simple to trade or swing trade. So this is a break of structure. Now, again, you still mark your other block. Okay, so this is the last opposing candle that you expect the market to come to mitigate. It didn't. Extremely bullish. Okay, no problem. So we have the swing low, right? So you take your Fibonacci retracement from the swing low to the swing high where the retracements are occurring from. Now you can see now, so there's some trade you will have missed if you are the type of what do they call them now? The type of there's my gas there. Okay, so what may happen here is that there's an interception. So this market actually returned back to 50. I think it just tapped into 50. But what can you find again? There's a massive fair value gap. Come on, that's so big, right? From here, because let's take from here, from this other block to this point, massive fair value gap. You see? Massive fair value gap. You can see that? So what we say now is that, okay, since you have a very big fair value gap here, you're now targeting to enter the 50% retracement of that. So let's take it down. 50%. Oh, sorry. So take my gun box. So let's measure the 50%. So this is 50%. So the market, so there's likelihood that you miss this market, very, very likely. Now, if you want to stack into the market, very, very likely that you're going to miss this trade. Very, very much likely that you're going to miss this trade. So you should understand that not all the trade you're going to catch. So, but this is a break of structure. The market has pushed back and then making a move. So you're taking an entry, okay? So, or you didn't find any entry. So let's quickly go. We have a new break of structure here. Sometimes if you go down to a lower time frame, you can find a relevant area. Now, this is another break of structure here. Sorry, excuse me. We have this. Okay, this is a break of structure. This one is over, and all of that. So this is the structural break. Now, so maybe that's where you're not going to find a trade because you have a rule. Now here, this is your other block. Massive, right? Very powerful. Now, do you have a fair value gap? Yes, of course, another massive fair value gap. Altogether, they just run into each other. I think this one collide. So this is a fair value gap, making sense. But remember, sometimes I always tell people I wait for my confirmation. So that's why I'm a conference trader, so that you will not just miss anything unnecessarily. So here you have this. It's a break of structure, and then it came to the other block perfectly well. And then that's another entry for you. Your stop loss is below the other block. So if you look at it now, oh my God, trading. So if this is your entry, some people just enter and put their stop loss below the low of the other block, which has many. This is just 16 pips, ladies and gentlemen. So if you're going to find to even below here, that's just how many pips? 21 pips. So even if you use 0.1, $21 is what you are risking. And eventually the market get up 1:2 risk reward. Okay, so if you want 1:2 risk reward, it's already done here. So you can see, right? And this market again is like, it seems now want to continue to move up. So let's go up here. So on this same 1 hour again, so you have a break of structure. The market is going to be very choppy here, but I think it's just like kind of inducement. The market is going to go up. I think so. The market is going to go up because this is this now. Because you know it has been down here, so I can't remember. I can't imagine what's going to bring the market back again. Anyway, so this is a break of structure, and then you have this other block. Then you have another break of structure. You have this other block. You have this other block. Then we have another break of structure. All right. Yes. Okay. Then you have this other block. You have this other block. You have this other block. There are many of them like that. Okay. Then you have another break of structure. So let's go here. So take note that if it has to break structure on a higher time frame, can be just the wick of the candle. So nevertheless, you have a break of structure there. So you have this other block here. I think was respected. Then now that this one is now taken out and all of that, so you're going to have this as a total break of structure together here. So let's still maintain standard of this other block. So you have this, you have this. So let's go by this. All right. So you have this, let's still do this. As a swing trader, the market have returned back to it. So this other block, this is your entry anyway. Now I have entry mode there. I told you the power of 3 or CRT. What's the power of 3 here? Very simple. So the market was coming down. And what happened? What did it create? This is even a candle range. Okay, no, this is a power of 3 because this was supposed to close inside the so this is not a candle range, it's a power of 3. This is a candle range. 1 hour time frame, this is a candle range. So you can even trade the candle range as a trader. And now here, this is power of 3. So that means this one happened, then you're entering the market. Just understand that you are going to make loss. So that's one thing you need to understand. So this, even if you want to do a prop firm, you can easily pass your prop firm with this strategy, right? So how many pips is this? Just 3 pips. Am I correct? Is it true? It's unbelievable. Okay. So then you'll take profit. 1:2 risk reward, depending on how many. So this is this too fast. Now imagine when you are now going to target this up here. That's 1:10 risk reward. What are you saying, Felix? 1:10 risk reward. You heard me right. 1:10 risk reward. The market got up again and do what it was doing, no problem. 1:10 risk reward. This is very simple, perfect to an entry. So once you are trading currency, remove yourself from too much noise of going to lower time frame. Now, if you want to go to lower time frame here now, for instance, let's say I'm taking off this, then maybe you say, okay, the market have come to your other block and all of that. So if you go down to 30 minutes, let's look at it. You'll be refining. I think it's good that just required those kind of refinements. So going back to 1 minute, though sometimes if it's at a turning point, when you go back to those 5 minutes, 1 minute, it makes a lot of sense because you can see market structure shift faster, and then you can do what we call sniper entry. So this sniper entry will make a lot of sense for you. That's one of the beautiful things that you can enjoy when you go into that. So if you look at it now, although this line had broke down below, yeah, which is not going to make too much sense for me and you. But however, if you look at it now, so what really happened here, you have this, and then this. Once you come to currency, so because I'm not even ready to give all of this, once you come to currency, I don't give too much pay attention to so much of this because at this now, you will have said this. Look at see what happened here. You will have said this double top, yes, and you will enter. Then you'll be making small money. Market come back again. So that can be very dilly-dallying. So 1 hour should be your lowest time frame of entry as a swing trader, intraday trader, and all of that. Then you are going to be in rest, have good, nice rest without trouble, right? So you can see the market is blowing up now, and then 1 hour. So you see 1 hour time frame, 4 hour, 1 hour time frame, using your Fibonacci retracement with your smart money concept. It very make a lot of sense. Just draft him, so you can go to 15 minutes, however, especially when you want market to come back to um in your origin. So once market come to your origin, you are nicely good, as it were. Okay. This one has blown over this point. Okay, so that's how you trade currencies and all of that. Let's look at Euro USD. Same thing. Look at Euro USD. Makes sense. I think Euro USD want to go up. Oh, Euro USD want to go up. So let's look at what DSY is doing. Okay, I think DSY is retracing to an extent. That's what it means, because if you look at Euro DXY now, it's retracing. That's what it means. How? Well, look at it. That's the first. This is the last. This is the last break of structure for it, and then it has another block. So here, since this is here, so it has. So probably we can just have a return up, and then a sell down, perhaps go to 30 minutes or something like that. So it's already trying to change some kind of move, whatever. So we have a market structure shift already on 15 minutes. Sorry about that. So you can see this is, of course, this is the last break of structure. Then we have this low here. But take note, the market was not travel back to that your low. So you have to understand that. So, but what's exactly happening here? What's happening here is this. That's created this. Then we have another low here. So the market just kind of squeeze over and all of that. So that means you're going to take this one as your major low. This one. And then market, this is a change of character. So you probably want this market to return back up here. So this is a gap created, maybe to fill it, or probably come back to this opposing candle, which is what? Okay. The last bearish candle here. And then so the markets will come back to mitigate this, then sell down. So probably you now want to sell your positions. So I think the same thing now happening to opposing Euro USD. So if you look at a 1 hour time frame, so it was going down. So you have a very nice move down, continue, right? So if you now take from here, Euro USD equal, and then a breakdown. So we have a change of character here. Yeah, so have a change of character here. So the market came back to this one, whatever. So this one, and then mitigate it, and then sell down. Yeah, the opposing bullish candle, right, against the bearish candle. So here we have that. We have here, we have here, we have here, all of this. So this is the last one, and then we have, I think we have a fair value gap. Do we have right or something here? Okay, we have this. Then this is a change of character. So here, because yeah, this is it. This is a change of character. Because this is market broke that here and return back and finish up with this other block. Makes sense, right? So after the other block, there's a massive, right? So this massive sell. Then this is a break of structure. The break of structure. Okay. So from here to here, so then market just return retest and continue with that break of structure. Continue. So now we have to come back here. We are here now. So if we are here, we have a break of structure here. So if we have that break of structure here, so we have a change of character here. on 1 hour. So maybe patience requires you to wait. Patience requires you to wait for this market, probably here, another block. Then you probably want to use your favorite retracement level to check of this low, probably this high. Where are you likely going to come back to? So this one is just aligned with that 50% retracement level. And then, so do we have any fair value gap below that before? So we have a fair value gap here. So whichever area the market return back to here, start reacting maybe part of 3 candlestick and other things, then you understand? You want to find an entry. And that's what it is now. So you kind of entry here, and then you are buying. So that means you are waiting to buy Euro USD for so some persons. So this is a break of structure. So it's a swing trade that fits all of those currencies and all the like. You saw the USD card that we just did. The same thing. This is the I think there was the USD card. We did the USD card just now. Okay, no, was it? No, it was USD chef. Okay, it was USD chef. It was USD chef. So we saw USD card. Okay. Now I see moving massively. So you see a break of structure here. And then this is a change of character. You want to pull back, continue sales, and all of that. So ladies and gentlemen, that's as simple as possible for you to trade this market. Thank you. This is a swing trade. The same thing applicable to cryptocurrency, Bitcoin, Solana, and all of that. You can find a trade as much as possible. All right. So I'll be doing more videos that will help you people to take into trade on swing trade for currencies. Thank you.